There's Peter. Let's go. Hi, everybody. How you guys doing?
How you doing, Peter?
That we don't need to hear myself echo.
All right, good afternoon. Happy Sunday, everyone.
Yeah, you too. Have a good weekend.
Yeah, unlike Eastern Canada and
How you doing, Peter?
New York and New Jersey, air here is pretty good, but it is hot.
All right, good afternoon. Happy Sunday, everyone.
You can't really complain. No, I spend
Yeah, you too.
3 months.
Have a good weekend.
How freaking cold it is. So when it's warm, I should. But every year
Unlike
it's the same
Eastern
thing.
Canada, and unfortunately,
it gets
New York
extreme,
and New
but
Jersey, air
at
is
least the
pretty
air is
good,
good.
but it is hot.
Sounds
Can't-
good. Sounds
can't
good.
really complain.
So a couple things I wanted to go over in this one.
Freaking cold it
First thing I
is,
wanted to
so
talk
when
about
it's
actually is going to be
every year it's the same
cryptocurrency. I
thing.
know
It's,
we don't talk about that,
Yes,
you know,
it's true,
as
but,
much. But what are your
here's
thoughts
the-
currently going on with crypto and the SEC? And you know, obviously they're
Sounds
tanking
good.
across the board.
So
Why
there's
do
a
you
couple
think
things
the
I wanted to
SEC
go
is
over in
going
this
after
one.
them so hard right now?
First thing I wanted to talk about actually is going to be cryptocurrency.
Yeah,
I know
that's interesting.
we don't talk about that, you know, as much. But what are your thoughts currently going on with crypto and the SEC? And you know, obviously they're tanking across the board. Why do you think the SEC is going after them so hard right now?
Yeah, that's interesting. People that follow me for a long time know I don't trade crypto. I never have. My biggest reservation has been coming from a central bank background. I understood that the very concept of a cryptocurrency was a threat to fiat, and at some point I knew regulation was going to creep in every country. How it would look would be different in each country, but ultimately it's a control issue. And while it was a little subset of the black or gray economy, not a big deal. Um, but I think as it got bigger and bigger, it became, they tried to go mainstream, get Bitcoin futures trading. The Winklevoss brothers trying to get it on the CFTC, and so that's the involvement with SBF and all that in terms of trying to get it regulation friendly, or at least immune from criticism. So I think as it started to get bigger and bigger and more normalized, then the administration in the U.S. had to make a decision as to what do we want to do with this. And of course, there's been a power struggle between the SEC and the CFTC as to who should be governing it. And ultimately, I think Gary's trying to force his prerogative on the market, and thereby claim ownership of this issue. But you could also, I guess the funny thing for me is, as time goes by, I've become more like, I never thought the SEC was this paragon of virtue, and of course something like The Big Short exposes how bad they can be. And that documentary on Madoff also explored how inept the SEC was. But as I start to look at Gary's actions over the last 2.5 years, you start to wonder, was he a plant by Wall Street? I mean, he certainly facilitated a lot of weird things that should have been stamped down on. But for terms of crypto, yeah, I mean, whatever it looks like, it's going to mean bad news for crypto space, and that's why you're seeing. I mean, my problem is a lot of the people I follow on LinkedIn and elsewhere, they're all crypto skeptics like me. So it's like a sort of a reinforcing chamber where I don't really buy into the crypto argument that much, because I just see it like it's doomed, because I figured regulators would go after it eventually, and that's what they're doing. But so to me, going, well, what's going to survive? I think Bitcoin is too big to get killed, and I think there might be a valid use for it. But a lot of the shit coins, as they're called, I think they need to go, and they probably will go. So this just strikes me as the again, two things: SEC staking its power over the CFTC, and Rostam Benham, to be honest, is head of the CFTC commissioner. He's a bit of a again, he feels like someone's dad or uncle put him in that job. I mean, he's just this. He's like a figurehead. He doesn't really seem to have, like, where at least Gensler, he's got his little games going on. So I think SEC would have won that battle eventually anyway. So I think Gary's just forcing the issue here because it's being political viable. Because, to be honest, why is this accelerating now? Because we saw what happened with Silvergate. We saw what all the interlinkages between the banking system and crypto, and there's too many linkages now that's threatened the regional bank system. And I think that's really why the political expediency is kicked in here with Gensler going after Coinbase and now Finance. I mean, I follow a few guys on Twitter that continually point out how Binance is been wash trading for the last 10 years, and CZ built his game up by wash trading at a different firm, and of course then there's the tether issue, which really is the biggest issue for me. I can see it's a Ponzi scheme a mile away, and yet it still survives like a cockroach. And until tether goes away, I don't see myself getting into crypto. I feel it's too obvious a pump and dump. But yeah, everything's coming to a head now. It's politically viable to go after crypto, and as I said, anyway, this might go into your next question or not, but ultimately, if you want to launch a digital currency, fiat currency, you'll need to take out competitors, and that's what I think is going on.
Yeah, that was exactly what I was going to say. You know, you got Fed now coming in July, so they need to just quickly stomp out the competition. And then you had Gary Gensler say, you know, we don't need any more digital currencies. You got the dollar, the yen, all going digital now. So it seems like he's also, you know, pushing for that as well. But yeah, not going into crypto too much here because like I said, I know you're not really going into that field a lot. But the next thing I really wanted to talk about is the war going on with the treasury bonds and then the reverse repos, because what you have is all these big banks not leaving the reverse repo right now because it's still, you know, the rates aren't high enough on these bills, but they need to fill the TGA. So you're going to have a battle back and forth between, you know, the banks are like, we're not going to leave unless you make these super interesting. But the United States now has this problem where China backed off. You don't have all this foreign investors coming in. So they need those big banks. So there's going to be a battle between, you know, the treasury bond rate and the repo rate. What do you see going on with that?
Yeah, you know, and we've talked about this last few calls, and I mean, it actually, the funny thing that when I post stuff about the reverse repo, there's a I mean, just ignorance, I guess, but it's like, you know, not an understanding of what's going on in terms of what the reverse repo account is. So it was a facility put up by the Fed to basically soak up cash. Now, it they put in so much cash over the last 3 years that they basically have had to expand this program at least 3 times. And by expanding, I mean first each participant had a certain limit, whether it was like I forget how much, like a few hundred billion, and then each that limit got doubled. And then the available list of allowable list of participants expanded from just banks to near banks, and then from near banks to weird quasi financial institutions that really shouldn't be there. But so you get this huge uh, ability for more firms that can participate in this that weren't allowed to before, and everyone's limit's been so the limit's gone up and up and up. So now we're sitting at over $2 trillion limits, and the funny thing is that the rate on that, again, Fed funds is I believe 5%. So reverse repo is 505. So they're paying the Fed is paying 5 basis points more than Fed funds for banks to put their in your banks and in your whatever quasi Frankenstein FIs that have access to this. They can basically put their money at 505s. They're earning more than Fed funds. And think about this. So this money is basically, it's risk free because it's basically the Fed, and it's credit risk free again because it's the Fed, and it's totally liquid. You can access it anytime you want. So why would you leave this? First of all, yeah, like I mean, it's a perfect little comfy safety blanket. Like Linus would love this thing, security blanket from hell. I mean, it's just beautiful, and so yeah, the money market rates. So the Treasury obviously is now with the debt ceiling raised, they can go borrow, but they, we've talked about this, how much they need to borrow by July. Now they have tax rates coming in on the 15th, which is Thursday. So they're supposed to get, I can't remember the order of how many billions they're getting. It's like at least 150 billion or something like that. So they don't need to borrow like 500 billion this week, but they have been doing sizable short dated treasury auctions, right? So the problem with the treasury here is and trying to just stopgap the needs until they get this new tax receipt money, and then they'll probably have to do some longer term issuance later this week or next week. So the issue, of course, is like how much do they have to pay for this stuff, and it's going to be expensive. And so the question is, yeah, we're looking at reverse repo data, and it's not showing a drop below 2 trillion. So money's not leaving the reverse repo significantly yet. So are T-bills going to have to go up more? Yeah, they will. And so people like, well, it's if your reverse repo is 505 and T-bills yielding like 540, why wouldn't you move that money? You're making 35 basis points more going to T-bills. Okay, so fair enough. T-bills, government, AAA for now, U.S. government debt. But you've gone from basically being market risk neutral from reverse repo to now you're taking on market risk when you buy T-bill, because whatever the Fed does from that point on, you're exposed to interest rate risk. If you sit in a reverse repo when the Fed changes rates, you're market neutral because your reverse repo rate will reflect the Fed's move, whether it's up or down. You can probably be up. So you would want to basically be sitting in the reverse repo until you're sure the Fed is done. And then the optimal point to do that is when the rest of the market hasn't come to that conclusion yet. You see T-bills yielding much higher rates than the reverse repo. Then you go into the T-bills and then everyone realizes the Fed is done, and then that T-bill rate falls. But it may not fall immediately anyway, because again, there's demand issues. But the problem is, you have to be compensated for that market risk, and so you're not going to go and jump out of this reverse repo into T-bills unless you're feeling you're being compensated for the risk that the Fed rates. And again, the expectation is that given the Bank of Canada and RBA raised rates last week, the Fed, who typically doesn't react to what other central banks do, but in this case, if they're looking for an excuse to jump off the fence, then they got a precedence of two major G7 banks hiking. Sorry, not G7, G20, but so they got two central banks, I believe. I can't remember. Some other minor central bank also hiked last week. So their Fed may go. So if they go by 25, but then that leaves open, they may go in July as well. So you've got to have at least 50 basis points above reverse repo, if not more, to compensate for that market risk. And that's the real problem, is like people keep like the market risk is real, because every time people think, the Fed's done, they paused, they're done. Look at the look at commercial real estate and all that other stuff we can talk about later. But it's like, doom is coming. The Fed's got to stop. And yet the Fed is not making any progress getting inflation closer to the disinflation slowing. So inflation's still going to be elevated. It's nowhere going to be near 3%. So they've got to keep pretending to be hawkish. So they got to keep hiking until they break something. And then they just hope that their other tools can mitigate that breaking. And I don't think they can. But in the meantime, their loss of credibility is more important to them, or trying to stop that. I mean, my view, they've already lost it, but that's another side of the story. But that's the issue, is they may not be done, and until their market thinks they're done, it's going to be hard for money to leave that reverse repo. So we're sort of stuck in a crossroads. So we'll see what they say on Wednesday. Should be interesting.
Yeah, and that's why I feel like it's in a spiral, because they kind of have no choice but to keep raising it. And at that point, I mean, we went back to you're saying, those one-day Treasury bonds, or bills, where they haven't done that since 2007. It's just history repeating itself over and over again.
Slight variations, but same tune.
Yeah. So, leading into that, and you were kind of talking about, I'll just skip down because you went into the commercial real estate. So we'll just skip down to that for a second before we get back into the other thing. But commercial real estate, it actually has $840 million worth of back payments. 1.5 trillion in renewals coming soon. What do you see happening from this time bomb in the real estate sector, and how is this going to affect banks and lending going forward?
Yeah, I mean, there's so many stories out there that I can't even keep up with all the doom and gloom potential. I honestly, if you say, is the regional bank crisis over with? No, it's not, because what was a liquidity crisis a month ago or 2 months ago is now a solvency risk. Again, the Fed keeps hiking, that just adds more pain to it. So there's a solvency risk coming on to regional banks, and so they need to either fold or merge. If I was a short, and again, this is a problematic thing because they went a little berserk a month ago after Federated Republic was knocked down, and they started chasing PacWest. And I think they overstepped the line. So Washington is watching them. Of course, the SEC made noises, and there's a DOJ investigation, which we've been knowing about for 2 years now, but they're supposed to make some concrete steps in the next few months. So I think shorts have to be careful about shorting regional banks because it's a political issue now. But I do think the underlying short trade of regional banks is valid because yeah, the commercial real estate problem is it's not going to go away. It's not Fed's not cutting rates anytime soon. Lending standards are not going to be they're not going to find enough good loans to make, and that's the problem. They've already made a lot of bad loans, and so yeah, like when all these I mean, as I said, I've just lost track of all the. I mean, you probably have more information in hand than I do in terms of the number of disaster scenarios coming up. But everything I've read suggests that some of these loan resets are going to be ugly, and some of it's coming due in the next few months. Some is a year away. Um, but yeah, like it's like you can't just sit there and say, "Oh, it's a year away. I'll ignore the problem." Well, of course, if you're short an AMC, that's exactly what you do. Oh, we'll just live for today. But um, yeah, I think commercial real estate is the next big problem, and it's not like it's a black swan. Everyone knows about it. It's just like you're watching the dam. You can see the cracks in the dam. It's like it's gonna break at some point. Just when? So it's gonna be a bad scenario, and I what does that translate into? I don't know. It's going to be ugly. So.
Yeah, I mean, you're already talking just with that back payment renewals. You're talking over 2.4 trillion, and before those renewals even come up, it's going to be higher than 840 in back payment not paid. So that's going to be a massive thing coming forward. But of course, we'll end up bailing them out, or they'll probably make a federal program for it. Of course.
Yep.
But keeping it into the real estate market here, before I get into the United States one, Bank of Canada, since you have more knowledge over in the Canadian sector there, Bank of Canada announced that rates over there could be going up by another 40% very soon. And you guys are already having basically a bubble over there. What are your thoughts happening in the Canadian market going on?
Yeah, so yeah, the bank hiked by 25 basis points on I believe it was Wednesday. The market was generally surprised by that. I'm not the bias. The Bank of Canada had a hiking bias, so it was like, okay, if they're going to move, they're going to hike. But sort of there were various optics involved, and as an ex central banker and a longtime bank watcher, I was sort of erring on the side. Yeah, they probably won't go just because they haven't laid the groundwork. But no, they surprised the market, and they have done that in the past. So it's not that rare. But the fact is that again, this was something that sort of incited. Like it was kind of funny because the Bank of Canada moved, and all of a sudden, Treasury markets were moving. Why is the U.S. Treasury market moving? Because of the Bank of Canada. That's sort of like the horse. The cart leading the horse, and it's like, well, it's just that so many, if the Fed was on the fence, this is just another incentive to act as well. And so the Bank of Canada, by doing this, it was dramatic. We saw short term, like 2 to 5 year bond move 20 basis points. That's huge. So, I was buying some bonds ahead of the Bank of Canada market announcement, and yeah, like that didn't work out. And then the next day we had the U.S. Jobless claims data come out on the weaker side. It's like, so there's so much conflicting information. So it's interesting. I posted something on LinkedIn. It's like this is like, can you rely on anything that the data is coming out? This is the problem. The market is jumping on all these things, and the assumption is that inflation's still hot. No one really even trusts the inflation data to some extent. But yeah, like where are the jobs coming from? Job creation. Okay, that was the other thing. Yeah, Canadian jobs for May. The market consensus was plus 26,000, and actually the actual number was minus 17 and a half. It's like, okay, how did you all get it wrong? But then again, how did all American economists get non-farm wrong for the 5th month or 6th month in a row? The consensus is so bad in forecasting the jobs data, and yet the job data is what the Fed and the Bank of Canada are using to justify hiking rates. So yeah, immediately after the Bank of Canada hiked rates, the jobs number came out much weaker than expected. So now it's like, well, is the bank going to hike again in July? And it's uncertain. But in the meantime, again, the reset issue, we've talked about this before, but like in the U.S., you take out a 30-year mortgage, you don't have to worry about, you lock in a 2% rate, you can keep paying that 2% for the rest of your mortgage. Oh, rates go down to 1.5. Oh, I'll refinance that. I just save myself some money. You can't do that in Canada. What you can do is you take out a 5-year mortgage, and then you're subject to reset risk about 6. If you take out a 5-year fixed and you got a 30-year mortgage, you got 6 reset periods, well, 5 reset periods to worry about. So you've got you've got market risk in your mortgage, whereas the U.S. homeowner doesn't. And also, the U.S. homeowner has their interest payments are tax deductible. In Canada, you're not. So when you are in Canada and you buy a house, and say you're buying a $500,000 house, that you got more market. You're basically putting your capital outlay is higher because you don't get that interest rate tax benefit. And you're also subject to market reset risk, whereas in the U.S. you don't really, unless you move or you sell your house and flip stuff. So if you're a house flipper and you got 8 houses, then you got market risk in the U.S. But if you're just buying a house and you're happy with your 2% mortgage or whatever you got, then you're laughing because you got a 30-year period to pay that off. Canada, though, it's like every 5 years. Oh, I just locked in 2%. Oh, guess what? The Bank of Canada just hiked 500 basis points last year. When you only took a 2-year fix. Well, that was stupid of you because now in 2 years you got to reset it. 500 basis points higher. So your cash flow, if you basically decided I'm going to afford this house because I have this job, my wife has this job, we can afford to make this mortgage payment, and the bank's not likely to move rates because that's what my brilliant guy at my bank told me. Well, your brilliant guy at your bank is a moron because he just has a bachelor of history and doesn't know anything about anyway. So the fact is that a lot of these people get sucked into buying like the wrong mortgage. They buy a house, probably paid too much for it because they got overly generous financing in the past because interest rates were low, conditions were like favoring. Yeah, it's a capital market is low interest rates for longer because that's what the central bank said. And hey, you know what? Mom and dad are going to help us out with a down payment. And so we can buy, we really should only afford a $500,000 house. But damn it, I'm in Toronto and I don't want to commute 2 hours to get to work. So I'm going to buy $1 million house. Oh, well, can we afford it? Yeah, with this interest rate. But then 2 years later, oh shit, my interest payments have gone up, 200%. I can't afford the house anymore. What am I going to do? So a lot of people sitting in Toronto and Vancouver presumably are making this mental calculus right now where they said, hey, I locked in this mortgage. It's fine for a year or two, but down the road, it's like, what am I going to do? How are we going to do this? I need a better job. You got, you can't have kids because you need to keep working. Oh, well, maybe we should sell the house. Well, where are we going to move to? My job's in Toronto. Do we move from Toronto to Hamilton? God forbid. So just for example, like moving from Toronto to Hamilton is like moving from New York, Manhattan to Hackensack, New Jersey. Anyway, so I'm not trying to tear down Hamilton, but anyway, I mean it's a problem for Canada. Like there's going to be a reset risk here, and the expectation is that the bank and the Fed will have caused a slowdown, and the rates will have to reverse, and that's why the curve has been inverted in both Canada and the U.S. But for all that, the data is not supporting that. And again, if you look at the housing prices and the housing sales in Canada, they keep going up. And U.S. despite, there's got to be some impact for commercial real estate on U.S. residential properties, but you're not seeing too much of it now. But in Canada, the residential market is still hot. There's some cooling off in Toronto, Vancouver, but it's still really hot. And I'm trying to understand what's going on. So I keep pointing to immigration, and 2, I'm also pointing to inheritance. So, a lot of people have a hard time understanding this, but yeah, like the baby boomers have a huge amount of the national wealth in both countries. And, some of them are, the cohort is between 60 and 80 now. So most of them are retiring. A lot of them when the boomers got it. So boomers got this huge capital markets gain. They got they paid off their mortgages. They're sitting with, some nice IRAs. They basically market's been very generous to them over 20, 30 years. So they've got a lot of money. And yeah, some of them are probably force feeding their kids, help. Yeah, I said, you want help buy this house? Okay, you shouldn't really afford $1 million house, but we're giving you like a huge down payment for you. So don't worry. So a lot of short term thinking is going on because the baby boomers are facilitating this FOMO into buying housing. And to the extent that like you look at inflation and what is the biggest, personal investment hedge for inflation, it's home ownership, right? So you can't really fault people for wanting to buy real estate, because if I don't buy it now, we'll never be able to afford a house. So there's a lot of that thinking going on. And so yeah, the Canadian real estate market is way overheated, and yet it's not slowing down. And so when will it slow down? It could be just when these reset, like a lot of people that have floating rate mortgages already hitting, they get paid, but it's the guys that have the 5-year I took out a 3-year last year. I've got 2 years left. I'm not praying for a slowdown, but I mean, it's like, yeah, like I if the bank keeps hiking, that's gonna cause some pain. So there's a lot of people in that boat, and so we'll see. But yeah, Canadian market is like I said, the job market. This job number was interesting, and again, the bank's not going to react to one number, but it really will call into question of the wisdom of hiking when the job numbers are so volatile. And the same with the U.S. Like just going to the U.S. market, the non-farm numbers have been ridiculously overly surprisingly strong, again beating consensus month after month, and yet then the data revisions come in and they're rescaled back. And so what's going on in the US apparently, and I haven't delved in this too much, but it looks like seasonal smoothing from the BLS is creating some, like you can go look on Zero Hedge and there's conspiracy stories about it, but basically what the BLS is doing is some kind of seasonal adjustments to their data, which is causing a surprisingly strong number in the present and then revised number down the road. So you're basically doing accounting tricks to try and present a picture of a strong economy. Yeah, you look at something like the continuing claims data, which is a weekly data series, and to be honest, for most of my career, it didn't matter much. It was like, oh, you want some minor noise in the day? Oh, this is coming out at 8:30. It might cause a small blip in the market. But now it's like, oh my God, continuing claims are up. People can't find work. It's like, it contradicts to the non-farms. Okay, well then I'm gonna assume the Fed might not hike in July or might not hike this month. So it's taking on a lot more importance because people are not confident on the non-farms number, which is astounding to me because for my entire career, non-farms data has been the number one data source. Of all the things of the month, that's the one data source everyone wanted to trade off of. But if it's junk and no one can forecast it now, it's losing its credibility. So anyway, that's my thought on the Canadian market.
Thank you. And then you basically are going into my next thing. So I've been talking about a bubble happening in the United States, and recent data showed that real estate value declined by 600 billion. This is the third straight week of decline and still going. This is the lowest mortgage application since 1995. How bad do you think this crash is going to get in the United States? And do you see a crash happening in the United States? I know you have been kind of on the opposite ends of that, but that is still showing me that we're currently experiencing one now. Do you see a crash happening in the United States?
Yeah, as you said, if nothing else, the commercial real estate market will cause a cascading effect at some point. But there's other things going on, of course, and the entire financial market is the contraction. And like you said, you see these headlines. Oh, the Bears are conceding defeat. I find that very interesting timing. We all know that there's huge amounts of shorts positions out there, and we know that the tech rally has probably caused a lot of pain. So what happens when the other short stocks move up? That will cause a huge contraction, and that in itself will be a very murky, like what's going to go up, what's going to go down. I believe, part of me believes that like the people that are long crypto are seeing the Fed and the SEC and everything else going on and said, yeah, like we're going to need liquidity, so we're going to probably start dumping our crypto. And I think that may be what has been going on. It's like, yeah, there's a lawsuit going on, the SEC's coming on strong, and all this other crap going on. We probably should start scaling back our crypto bets. So I think in terms of a crash, yeah, I do believe something's going to happen. And I've said before, it's like the Fed is creating a problem where they're creating a massive hole in the road down the road, but we don't know exactly where that hole starts and how deep it is. And my big concern is that the hole can get deeper as you enter it. Like you said, imagine a sinkhole, and then all of a sudden your car gets pulled into the lip of it, and you think you can back away, but all of a sudden the hole just expands while you're trying to get away. And I think like what happens when the economy gets to that point, it's like, some people will freak out, and that will cause a chain reaction, freaking out, and all of a sudden the problem gets like, it's just the Fed has created this huge ammo dump, and they keep adding to the ammo dump and the ammo dump, and it just takes spark in the wrong spot to cause a huge explosion. So yeah, I do believe there's a slowdown. I just don't know what form it's going to take and when it's going to happen. But commercial real estate would be one of my prime triggers for it. So.
No, I definitely agree. And like you said, I don't really know what's going to be, happening forward here in the United States, because every single thing that they're doing to patch one thing makes something so much worse and so much worse. And every time they make out a new program, it gets tapped out instantly. I don't know if you saw that the federal home loan program had 1.5 trillion in it, and Silvergate and other banks that weren't actually giving out mortgages, they'd only give out 3 or 4 a year, were actually dipping inside of that program and taking out billions. And actually, that was propping up Silvergate at the time, was a federal home loan program loan. So it's
Yeah, no, that was sort of what I was alluding to, the linkages between the regional bank and the crypto world, and using federal home loan. Like the whole point about FTX buying that stupid branch in Washington or whatever was to turn into a crypto bank so they could access home loan liquidity, right? So it the Silvergate was the worst offender, but I mean, yeah, like Signature Bank was doing it in Northwest as well, so or sorry, Northeast as well. So it really is a question of interlinkages, and yeah, like that money should, like, I've had discussions on LinkedIn with some people that said, oh no, that's what the home loan bank is for. Now it's like, are you really stretching it? It's like, this is supposed to be facilitating. Again, the whole point about it, the home loan organization was created so that American homeowners, American citizens, could have a good shot at owning a house. And so Federal Home Loan Bank was there to help facilitate banks to make mortgage loans, not crypto loans. So yeah, the you calling yourself a bank and owning one branch just so you can access the home loan bank is bogus. So I think, again, this is the kind of stuff that was finally catching up to SEC and Washington, and saying, look, you've created incentives for crypto banks to basically use taxpayer money to facilitate fraud. So good job. So it needed to be addressed, and I think that's sort of the degree of home loan abetting crypto bank lending has got to stop, and I think that's part of what's going on.
Well, you basically answered my next question there, because I was going to say, in that post I tagged you the other day, you saw that they're doing crypto mortgage-backed loans now.
Yeah. Oh
What were
God.
your thoughts on crypto mortgage-backed loans?
Yeah, I saw that. That was interesting, because then you had a crypto bro saying, like, I mean, I think he's one of my followers here. He said, dude, you should be buying Bitcoin here. It's like, I having crypto, especially, well, Bitcoin, I guess, again, I think it's going to live, but I don't know where it's going to go to first. Like, yeah, like if your collateral is something that volatile, it can go up, like, if Bitcoin could go from 27 to 25 to 24 to 23 to 19 to 18 to 17, like, that's gonna, like, what that's gonna do to your margin calls on your mortgage loans. It's like, it seems dangerous to do that, right? So the whole point about something like collateral, like treasuries, are valuable because it's 100% haircut, and they're liquid, and they're, you shouldn't have dramatic moves in treasuries unless there's a huge Federal Reserve Bank screw up. So as I said, the move in the government of Canada's last week of 20 basis points was huge because market got caught surprise. But like, Bitcoin is so volatile, and the crypto space in general is right now very, very unstable. So, like, why would you tie in mortgage lending to crypto? I mean, they're trying to be like, oh, this is the way of the future. Well, the future is unclear right now in terms of crypto, and until things get resolved, I think it's dangerous to facilitate a product like that. But as I said, people are desperate for trying to hype things, and yeah, there's people that believe that, again, I get a lot of crypto skeptics on my feed, so I see a lot of, like, it's like, buy the dip, like, someone had a crab in a pot, and the crab was eating a piece of corn, and it's like, crypto dip buyers buying the dip one last time, so that's the sort of feeling I've get. It's like, yeah, like, I don't know where, like, I think some of the shit coins are going to go, and will the major, will Ethereum be around? Yeah, I don't know, probably, but where will Bitcoin go? I don't know. It could go to 10,000, could go to, and it's not going to 60,000, and, like, not immediately. And one of those guys talking about Bitcoin going to 1 million. Where's Kathy Woods recently on Bitcoin? So there's all kinds of uncertainty regarding where it's going to go and what form the crypto world will look. And so, yeah, would you really want to be buying a house and using your crypto as your sort of down payment? Or I don't know. I don't have enough information to be an expert on it, but it seems rash and unwise at the current time.
Yeah, I didn't talk too much. I mean, I just feel like it's another way for them to try and sneak out more loans that just get us on bad loans, bad things, just like Rocket Mortgage. They're back down to the 1% upfront ninja loans. I don't know if you saw, but did you see that FTX 2.0 is scheduled to release in Q3?
Yeah. I mean, that's the sort of thing you look at it going, the whole thing was a fraud, more or less. And yet, like the guys that basically take it over and do the bankruptcy unwind, they're trying to make a viable business out of it. And insofar as there are bits and pieces of the whole thing that were like, Sam was basically buying up everything, and just like Google bought YouTube and all this other stuff. Sam was buying a lot of viable components, but the whole thing was badly managed. So there is probably some real value to some of the organization, and like so they probably want to take advantage of that and get some kind of value out of the going concern. But like I think the problem is the marketing behind it will be bad, especially with now Binance and Coinbase being sued. And then who knows if CZ will go to jail or not, but it's definitely looking like bad time to be thinking about crypto and launching an exchange. But we're going to reopen in the Caymans or whatever. It's like, okay, yeah. And again, a lot of my crypto skeptics point to this, like just perpetuating the tether fraud. And so FTX wants to launch 2.0. I think they need to change the name, to be honest, because it's not going to market well. So.
Yeah, and speaking of doing that, like you said, they're going to move over. I was reading an article the other day and said that to get around all the rules here in the United States, a lot of these banks actually did that with the swap contracts as well. They would rewrite the swap contracts in other countries that had different rulings, so it wouldn't affect the United States. What are your thoughts on that?
Yeah, I mean that sounds. I don't have a lot of information on it, but that sounds typical of how they've been doing this. And like the reporting. We've talked about this in AMC and GameStop and other stocks, how they do these swaps to reduce their exposure. And so the short interest is not ridiculously noticeable because it's spread out amongst other, entities worldwide that don't have to report or don't report, report voluntarily or whatever. They don't, the information is not accurate. So, we know that the known short interest in AMC is 21%, but really, how swaps distorted that. And that's probably the same thing with crypto. It's like, getting around these regulations. There's no global framework for crypto regulation. It's still very much a wild west. So yeah, like these swaps can hide a lot of stuff. And I mean that we keep talking about. The reason I insofar as ISDA is basically, hopefully, it's international, so it gets around, like it deals with some of that. Oh, we're not a U.S. entity, so we don't have to report. Well, yeah, if you're under ISDA, though, you have to report. So, sorry, I don't know if I'm going off topic into one of your other questions, but I mean, the BIS keeps mentioning these swap exposures that are huge, and it's like, yeah, like that's just another ticking time bomb. It may be that the risk is well diversified amongst many institutions, or maybe that like how many $1 trillion are with one or two banks. And so that's the concern for me, is like, yeah, these swaps are distorting everything. The regulators don't have a clue. Again, the crypto space is not regulated to begin with. So yeah, I think this is part of it. It's like, yeah, like there's so much potential risk. And if you talk about these stock tokens and what's been going on, like who knows what kind of risk has been offset and not being shown correctly. And so, yeah, like insofar as the SEC is finally clamping down on this, I think it's overdue. And I mentioned to someone on Twitter, it's like, yeah, like Binance had to go because they've been between them and Bittrex and FTX. They were the ones that were doing these tokens. So it probably will be the other entities have done it as well. But like, I want Binance shut down in the US and everywhere, to be honest. So because it just will, to borrow Trump, it will drain the swamp, and it won't clear up the swamp entirely. But we need clarity, and that's what the SEC hasn't got, and the regulators haven't got, as to what the hell's been hidden with all these derivative tricks.
So yeah, I can't even imagine when that gets exposed. I mean, they say the notional value is over 4 quadrillion. So it's like you said, who knows how much is actually in that? It's got to be an insane amount. Yeah. And half of those aren't even reported. And then like, look at the family offices. Family offices, you still don't even see those swaps, and they don't count or report them. And family offices control 7.6 trillion in assets, which is twice the size of hedge funds. So they're a big deal, and people don't seem to talk about them very much at all either.
Yeah, exactly. And that's another issue, is like, I think there's a realization as Archegos has been deconstructed. It's like, wow, you know what, we really, this exemption for family offices, we need to do something about this, because for every William Kwong, there's probably three others we don't know about. So
Yeah, we'll see. That leads into my last question here is do you think that the government will always be able to stay ahead of this, or is there so many bubbles going on in so many different sectors, you think that they're not going to be able to keep this under control?
they have, like, the government can't. I mean, there's the way government is organized. It is always going to be reactive versus proactive. You The concern for some place like Washington would be, aside from all the you know the interest influencing money that goes on, is like, if we try and be proactively regulating this market, we might stifle innovation. We might we don't want to shoot the goose that lays our golden eggs. So it's always going to be reactive. The problem I see is like that, you know, Gary Gensler complains about not having enough money for coffee. I mean, to some extent, that is true. It's like successive administrations have starved regulators for funding, and so they have to be careful about what battles they pick, and then they don't even have the resources to adequately follow up on some of them. So, for example, the short selling one has been deferred to the DOJ because they needed the DOJ's resources. So, yeah, the government is never going to be able to stay on top of everything unless there's a wholesale change of thinking in Washington. And again, there's so many changes that need to happen in terms of the architecture. For example, more funding in Washington, but there has to be, like, you have to incentivize the regulators to go out. Like, if Gary is, again, assuming he's not a bought and paid for actor, but even then, his political master is Biden, and it's like Biden should be giving him targets. It's like, hey, you know what? We want to go after Ken Griffin because he's a Republican donor. Oh, but he also donated money to us, so don't worry about it. Let Ken off the hook. So, but that's the thing. It's like, you'd expect that Gary would have actually gone after some hedge funds that are Republican supporters, but he hasn't. So I don't know, like, what would entice them to actually do their job. There has to be some change of incentives. As I said, if I was working in, like, if I was organizing Washington, I would be giving incentives for the SEC to actually find, like, again, not spurious fines. It's not like we want to have cops like hitting lights, saying, "Oh, your light's out because I just smashed it. Here, give me $100." We don't want the SEC to do that. But, like, if you find whistleblowers giving you enough information to go after someone, fine them not $3 million for 10 years of abuses like Goldman. Go after them and take a chunk, and then you get a 10% bonus of whatever you find. I mean, it's like America's built on self interest and profit taking. So give the regulators a skin in the game. Maybe they'll actually be more effective. I don't know. That's my market bias talking. But I just, until that happens, yeah, the regulators are always going to be behind the game.
No, I agree. That the thing is, it's like I posted that a little bit ago. It's like politicians and everything, the way it is with dark money in these groups, is that this last election there was $1 billion in dark money. $260 million went missing. Well, where do you think that $260 million went? It went to the politicians. It went to all the corruption, paying off the bribes and all of this stuff. And that's my point. It's like,
well,
you sit there and you look at.
Yeah.
Oh, sorry,
no,
go
I was
ahead.
just saying, did Nancy Pelosi make all her money through trading, or did she get some seed money through friends? So.
Yeah, exactly. And it's like, that's the thing. It's like, you're right on. Until these politicians, until we get rid of dark money, until we get rid of them, their incentive right now is to keep this going, keep it afloat, because how else are they going to make hundreds of millions? It's like you said, you look at a whole bunch of these politicians, they'll come into office at $5 million. They don't even trade in the stock market, but yet they leave with 200 million. Where did the other $150 million come from? It came from dark money. It came from all these things. See, what happened is they had PACs, and PACs were limited to $5,000. So what they ended up doing is making super PACs. And then super PACs are like, well, it's just like the stock market. And that's what's funny is they go, you're not allowed to donate to the individual itself. You can donate to the campaign to pay for ads and this and that and this. But then they find out all of the rules that are against it, like the laws. Hey, if you do this, well, they're like slaps on the wrist, like no tomorrow. So what they've seen is the last 3 elections is they've been paying it straight to the guys through the funds anyways, and not even getting in trouble. So it's literally a legal bribe.
Yeah. I mean, and that's just it. It's like there's no incentive to clean up the swamp because everyone benefits from it. And even again, I don't want to get too political, but Trump was in office for 4 years and nothing changed, right? So
Yeah, like you said, I mean, it is so insanely corrupt. That's why I'm saying, like, our best weapon still. It's like, even with Doug from Virtue, he tried to challenge some other guy to a space call, and it's like, dude, let me have one with you. Let me talk to you, because I know exactly what you're doing, and I'll explain so everyone can understand. And let's see you, talk about that, and instantly, we'll go talk to my lawyer. But, we got to talk to my lawyer. You got to be vetted first, because I need to know who you are. But yet, the first post he did with that guy was, I don't know who you are. I don't know anything about you, but you're an idiot. So let's do a space call.
Yeah, I mean, I was thinking about that. So, and I was thinking, do I need some preparation for this call? And I thought, well, you're probably going to talk about Doug, and I have had limited interaction with Doug, and I don't plan on having any interaction with him. But I mean, my view is he's nowhere in Ken Griffin's league. Like, again, Doug is like, he's sort of the placeholder of his boss, who actually owns Virtue. I can't remember the guy's name, but it's like, you go into the guy's background, it has the usual sort of like organized crime type vibes to it. And I don't get into it, but it's like, so Dougie is basically just he's nowhere in Ken Griffin's league. And like, to me, Ken Griffin is like the arch. He's like Lex Luthor. So Ken Griffin, he's guilty of sin. Will he ever go to jail? No, because he plays the game so well. And this is the frustrating thing: is like, the guy, like, is got to be one of the most corrupt individuals. And he probably started off not that corrupt as a kid. But he went to Harvard. His rich family, whatever, traded his dorm in Harvard. So, but then he got exposed to hedge fund managers when he was in his 20s, and so he's sort of got acclimatized to this world where he had access to the right connections and was able to build his empire. And I think as you go into fight or flight, and he's tried to survive all these years, you make moral compromises, and to the point where, but Ken Griffin was never a stupid guy, right? So this is the problem. He's played the game so well that he's got himself protected every which way but loose. I don't know much about Dougie, but I don't. The fact Dougie wastes his time on Twitter insulting, investor turf, it speaks to me that he's got too much free time on his hands. So he's not really. I think he's a placeholder. He's like killing time for another 5 years, and then, eventually something will catch up to this. But Doug will hopefully be gone. That's, I think, what his key point is. I'm just here as a, PR face for this. I'm just doing this sort of like, whatever. Virtue's a good company. Blah blah blah. We're not bad people. We're a market maker. We provide a service. And the problem is, and the question I would have, of course, for him is, Doug. The liquidity thing. It's like, yeah, you have a client wants to buy 10,000 AMC. You have 500 AMC in your books. Okay, but you're going to sell them 10,000 AMC, and you're going to justify it by the fact that otherwise this guy would have to go to 5 different brokerages and pay, huge amounts of spread to get these 10,000 shares, and that would drive up the price. And the guy's much better off getting one price from you, and this is better for the client. Okay, well, first of all, it's not price discovery. Second of all, when do you cover those other 9,500 shares? When? And that's the question that never gets answered, because like, AMC failed delivers. Why are they so high all the time? And historically, for the last 3 years, what other company has so much FTDs? So don't tell me.
Utilization for 12 months.
Yeah, it's like,
at 100%.
it drives me crazy. So like, my problem with Doug is like, I could have a, but the same with Ken Griffin, dude. Yeah, you kept your Ken Griffin is like, he's got dirt all over him, but nothing will stick. And just like Jamie Dimon, but like, Dougie's not that league. And I unfortunately, I would just like, I'd lose my temper with Dougie, I think, at some point. So I don't want to talk to him. But I mean,
No, I don't. I would be going off on the guy because, yeah, like you said, and that's the thing, and that's why they're fighting that, those SEC rules so hard, like Dougie too, because Dougie's company would be gone, if they get those auction house rules. There's no more payment for order flow.
Yeah, exactly. And so the first thing the Virtue does when the SEC comes up with a proposal to increase transparency, oh, we're going to sue that. We don't want that. So yeah, like Doug, the SEC, either accusing them of being totally incompetent, which, well, but I mean, they've obviously put some thought into this proposal, and you're immediately suing them. So that just shows your self-interest speaking, Doug. You're not out for the common good. You're out for Virtue's good. And fair enough. If I was running Virtue, maybe I'd act the same kind of asshole way. But at some point, that's going to catch up with you. At some point, the public approval of the way the market's structured is not going to exist anymore. maybe you won't be around, Doug. Maybe that's your plan. 5 years, you'll be laughing on a beach somewhere, making whatever pina coladas and laughing at the idiots that took up your mess. So that's what I think is happening. Is like he doesn't care because he knows that by the time this catches up to him, he'll be gone. So
Yeah, just like Powell and the Feds. They can hide things for up to they can redact them and all that stuff and use their little special tricks and hide things for up to 12 years. And Fed or Powell is like, in 12 years, you guys can go ahead and decide what we did. Yeah, because they'll be long gone, like you said, or they'll be passed away because 99% of our politicians should be in a nursing home anyway.
Yeah, that's another story. Yeah.
And that's the thing too, is like the thing that just frustrates me too, and like we'll get into that with the thing. So like you were talking about with Ken Griffin and all this stuff, and how they're so embedded, and it's like, and then you got people like Elon who was fighting him against Ken Griffin. Now he's partnering with Ken Griffin in a sense. He's trying to get trying to get into office here. And the thing is that I think is if they do get those two in office, they will make Ken Griffin the treasurer. Do you agree with that? And then the first thing he'll do is give himself those. He'll give himself those exemptions from the banks he wanted in 2009.
Yeah, so don't forget. So when George Bush got elected in whatever 2000, Al Gore was upset and all that. But one thing George Bush did was bring Hank Paulson in from Goldman Sachs. He was the CEO of Goldman. So Hank Paulson was able to sell his holdings of Goldman at tax-free. So it wasn't a huge amount of money comparatively speaking, but like imagine Ken Griffin being able to divest himself of Citadel, taking it off his hands and basically enjoying a tax-free holiday. So of course he wants his job. And like from a power point of view, it's like, Ken Ken runs on this thing of like, it cracks me up. It's like, I want to be I'll help America if it really needs me. It's like, you know what? Maybe that's what the U.S. needs, though. This is my problem. Is like he is again. I'm not a fan of him morally, but I mean, like he's definitely a cockroach. He can survive. Maybe he helps the U.S. financially. I don't know, but he'll help himself. He'll help himself more than he'll help anyone else. Though that's the thing. So I have no doubts that he's probably got some. If a Republican wins, he will probably get Treasury Secretary. And again, I try not to be political, but the way things are looking, like again, if Donald Trump does not get sidestepped by all what's going on this week, and Donald Trump wins the nomination, maybe he doesn't like Ken. But even then, I wonder if Ken will worm his way into his graces somehow. So I'm not discounting a Trump win, and I'm not discounting that Ken would still be Treasury Secretary. So just something to think about. Whether this would be good or bad for America is another question, but from a moral standpoint of view, it's like, this makes me sick. And so that's the problem I have right now with everything, though. There's a lot I see going on in markets and politics, and it all makes me sick. Like, someone said, "Oh, Peter, you should run for prime minister. We'd support you." And it's like, do I even want that job? Like, God, now, it's like I'd be drowning, like I'd be swallowing so much shit every day. It's like, I'm no fan of Trudeau. I'm not going to get into Canadian politics, but like, it's just such a mess right now. There's too much. There's too much moral compromises going on, and it really is hard. So like I don't know, Ken Griffin for Treasury Secretary. It's certainly in his interest to be Treasury Secretary from a tax point of view.
Oh yeah, and that would be able to get him his laws he wanted and his exemptions too for Citadel that he's been trying to get forever, but he can't because he's not a bank.
Yeah.
But like you said, man, the United States, where we let criminals become politicians and politicians become criminals.
Yeah. I mean, the Santos guy, like con man extraordinaire, got elected to Congress, and now apparently someone's bailing him out. Like, so it's like, I mean, okay, well, SBF got bailed out, so, but it's like this guy was an obvious con artist. He got elected to, like, it's out of a movie, right? I think there's a James Rockford, whoever the guy that played Rockford Files, James Garner. There was a movie, I can't, it was a TV movie, but he was like a total con man. He was like, he had the same name as the guy that died, and he ran on his ticket and got elected. So it's like, that's what the Santos thing is. Like, if you got politicians that can get elected and a con artist, or you get a guy who basically had a stroke and yet he gets elected over a TV doctor personality. I mean, I said, the more I think about stuff like this, it gets me sick. It's just terrible.
Well, yeah, that's everyone wonders why I swear all the time, man. It's because I'm looking at this stuff all day long. It's just like, good God, and no one cares. And that's the thing that blows my mind. It's like, these guys do stuff that they should be in prison forever. And all it is, and like, all that becomes is a story on the media, social media. It'll become a story, and it's proven on there. They're proven guilty, but they still don't get arrested. Nothing happens to them.
Yeah, exactly. And I mean, so like, just I don't know if you had any more questions, but I was going to veer off into like some personal topics here. So, Tucker Carlson had his second video on Twitter, and of course Elon is like, yeah, Tucker, we love the fact you're we want more people on this doing this. You mean Tucker goes off on again? I'm not. This is always so politically sensitive, but Tucker goes off on Ukraine. Accuses Ukraine of blowing up the bridge, sorry, the dam, and all kinds of other interesting comments, like Obama was gay. It's like, what the hell? And I've never been a Tucker Carlson fan, but I thought what happened with Fox is kind of bullshit. So I was like, okay, I'm all for you setting up your new, and he got sued by Fox apparently, but for violating his contract, even though it's, Elon says he's not paying Tucker to be there, so that would not violate his contract apparently. But anyway, it's like the guy goes off on Ukraine. It's like, okay, I posted something to the effect I'm not sure who blew up the dam, and then I had a very more vocal against Russia. And okay, fair enough. And looking at it, like I look at the evidence now. The damage to the dam was clearly an internal explosion. The Russians controlled the dam. The Russians are being counterattacked by Ukraine. Yeah, okay, so the Russians probably blew the dam, and that's typical of their slash and burn. Historically, they've retreated from Moscow in 1812 and starved Napoleon. So it's like, yeah, they do this. But Tucker Carlson is basically accusing the Ukraine of destroying their own crops and everything else. Like anyway, Tucker, like, it is like there's so much BS out there, and like this is what I'm noticing is, as you say, there's so much going on. No one gets, like, a story about aliens, and this supposed like well-regarded expert says, oh yeah, the U.S. has been hiding alien ship remains, and then it's like Elon says, I would know, and I've not seen any evidence. It's like, yeah, you might probably know if it's like there's so much, like, but no media is not talking about it because, oh, we don't talk about aliens. So okay, maybe it's just a bullshit, another, like, I don't know. There's so much ambiguity out there, and it's like, so you said you see something like Ken Griffin, like Ken Griffin's been doing this. Well, can you prove it? Yeah, that's my problem with LinkedIn 2 years ago. I can't prove it. Do I have the auditability to go into Citadel's books and see what they've been doing? No. It's like someone like the DOJ should, though. So I had to step back from my comments 2 years ago. It's like, this is the thing. There's so much crap going on. There's so much obfuscation and so much storytelling and counter programming, and we see it on Twitter. It's like every day having to fight shorts and fight random bots and everything else with so much noise and so much, and the lawsuit. And this is the last thing I was going to get to. Yeah, and I didn't go on Twitter, and I don't try and get views for smashing other people. So I've rarely attack unless I get attacked first, and even then I try and restrain myself. But honestly, this court case is driving me to the edges of extreme. It's like, you have submitted 11 documents to the court, all have been rejected. The court asked you to provide evidence that you had beneficial ownership in AMC. You did not do so. You later put out a YouTube showing that you have ownership, but there's why you say you're sick and you can't spend time doing this anymore, but then you keep doing it and you still haven't submitted to the court what they want. So all this stuff has been rejected. You're wasting everyone's time and you're creating drama. And it's like, wonder, is this just to get drama? Like, is this just for him to get views? But it's like there's a bunch of these characters, and I suspect they're all running the same crowd, and all their supporters all running the same voices crowd. And we all know, okay, let's like drop the name Froggy, drop the name Tara, drop the name Cohodes. It's all related to, and so yeah, like if I see this individual with 11 submissions, and he's basically been on voice chats with these guys, and pain in the butt guy that's like, ex-criminal has also been. I don't get into it. It's just they're all running the same thing. It's like your codes basically said a few months ago, like, if you want to screw AMC up, bother them with lawsuits. So go figure what happened when the reverse split was announced. Oh, lawsuit. So it's all very, like, I don't even have to, like, go into the melodramatics. Just think about it logically. They're asked to submit some proof that they were a beneficial owner. They have not done so. So why not? Like, if you have the ability to submit 11 submissions to the court, you have the ability to learn what the court said in terms of proving that you had beneficial ownership. You did not do so. It was not a question of time because you had more than enough time. You were actively monitoring the case. So I get fed up with this nonsense, right? It's like, what, we've had months and months and months, and I think a lot of people are on the same wavelength as me. It's like it's time. Like if this reverse split is good or bad, let's find out. Let's stop delaying it. I mean, anyway. That's my rant for the day.
No, I mean, yeah, like I said, at this point, it's like you show it on a picture that looks like an Excel sheet and say that's your proof. Why didn't you send it in the dot courts, like you said? I mean, anything, that's a thing.
Yeah.
It takes 5 seconds to make something like that. But I don't know, man. This basically goes into my last question here because everybody wanted me to ask you this question. Do you see us ever winning this, or do you think that the government will always bail these guys out? There'll always be enough corruption, or will the debt and all this stuff get too high to where they can't bail them out? Or do you think that they'll get CBDCs in time?
Well, we talked about this last call too, and I honestly believe the amount of like misalignment of positions is so big now, and not just the squeeze plays, but the market in general, that it's too big for a bailout of conventional sense. So you would have to have some sort of intervention. Like, I don't know what kind, like, oh, is AMC going to squeeze? It's certainly the shorts need to cover, and when that happens, what it looks like, I don't know. But does it cause a chain reaction? Does GME, squeeze first? Does that cause a chain reaction? How does the authorities intervene in that? What do? Do they step in and say, nope, trading halted for 2 days? Or do they say price cap? Or do they say, whatever? Unclear. It's just, there's so many messes. And you look at what they basically broke the rules with, bank deposits. So, $100,000 limit, but no, we'll bail out Silicon Valley Bank. No, because it's too systematically important. Well, who decided that? Janet Yellen decided that. So Janet Yellen is going to decide what the price for GameStop to settle at is? Could be. Is that susceptible to you as a shareholder? No, not really. I'd like to see free market. Are we beyond a free market though? Like, if they're going to break the rules for deposit insurance, they can break the rules for anything. So yeah, I honestly don't have an answer as to.
Well, they already did. Look at the GameStop reporting the buy button removal. They already did. They already did that.
Yeah. So I don't know. I certainly, my faith in the financial market has been very much eroded. And again, I never played a lot in equity markets, and for me, my career was mostly fixed income and FX, and yeah, you had to know who you're dealing with, counterparty risk and all that, but we never had only the settlement nonsense that goes on with equities. So I think the rot is a lot bigger. Like, it's astonishing for me to say. I mean, I've been in, LIBOR fixing crisis and FX rate fixing crisis and all kinds of fraud related to FX, deals and accounting issues, and all that stuff is just peanuts compared to what I think has happened in equity markets. And so yeah, like, I don't see how there's a clean settle out of this. I think there'll be some sort of managed event at some point, and what that looks like, and does it involve a digital currency? Maybe, I don't know.
Yeah, and I don't think it's going to be able to go on here either, because it's like, if you look at it with the repos and you look at it with the bonds, that battle alone, because they gave so much power to the banks, and they're going to have to raise that so high, make it so attractive for them. The problem is they're going to make it also so attractive for us, and we're going to lead the banks, and you're going to see a run on the banks again. And we already saw with the other 3 going down, already equaling 2008. They're not going to be able to stop. You had 77 sitting on the sidelines. 37 of them were negative. So you should have technically already had another 37 go, banks go down.
Yeah, and
so if that would have happened, what would it have looked like? I just don't think they can keep up with this as well. I agree with you.
Yeah, I saw a stat. I'm not sure if I can remember the number, but it was something like 1.4 trillion left the banking system in the last quarter, and of which like 650 million went to the money market, and the rest went to something like the reverse repo or something. It's like, so yeah, like the drain from the banking system is huge, and there's no sign that it will stop. So
yeah, I think it's just going to get worse because, like I said, you're going to make all these new attractive things. You got Apple, you have other companies coming out already higher interest rates than the banks. You're basically every day have less and less incentives to be in a bank to the point where they're just going to not be needed.
Yeah, exactly.
But that was all my questions. There, we went over all 15. Did you want to talk about anything
No,
else?
I think that's really it. I mean, it's like it just a case of there are so many like peripheral points that we could talk about and waste time on, but I think the main thing is the main thing is to watch out what the Fed does and what that will do to market volatility. And again, it's been surprising that the VIX is so suppressed when there's black swan events lurking around every dimension. And whether the VIX is suppressed on purpose is an interesting question. And whether it has to do with the fact that there's a lot of option trading going on, same day Friday settlement option trading or whatever, it's changed the VIX and the VIX is no longer relevant. I don't know. But all in all, this is a very volatile period. The Fed is literally gambling with the health of the U.S. financial system, and we'll have to hope that Jay Powell and his friends don't botch things up too bad. But yeah, keep an eye out for any news on real estate defaults, because that will be probably my biggest concern as to what that does to the market. So.
Oh, I forgot one last thing I wanted to talk about. The other thing because we were talking about how it's not sustainable too. I don't know if you saw the credit card delinquencies. The rates are already higher than they were in 2008 and 2009, while the savings were going down, or are basically one of the lowest they've been in a long time for the average person. Like you said, I don't think they can sustain this because they're either going to squeeze retail out to the point where they're going to have to revolt, or you're going to have to give them stimuluses. Or
you just reminded me of another point too. Yeah, so the credit card delinquencies are interesting because traditionally that has been used. The credit card has been used as a way of providing stopgap financing, and then that is paid off using like a house refinance. But if everyone's already house refinanced because that's what they did 2 years ago, and a lot of that money has been used up, so they can't pay off the credit cards now, or they're making what I saw is similar data where they're basically things that can be delayed for a month, like, oh, I missed a payment on my my utility, or I missed one payment on my couch payment. It's like, yeah, like we're not going to make all our payments. We're going to have to do a triage and decide what's most important to pay. So that's showing household stress in terms of finances. And the other interesting thing that's coming up, and this is part of the debt ceiling agreement, I don't know if I talked about this last call, is so the restriction was that Biden can't continue to extend the student loan payment moratorium. So student loan payments will have to start being made this summer. And that has been money that's been financing consumption and perhaps paying off credit card debt. So if people have to start paying back student loans again, that's just one more straw on the camel's back. And so it'll be interesting to see. Yeah, I again, it just I worry that we've created too much of a doom and gloom scenario, and to the point that again, the $2 trillion sitting in the reverse repo account, that's a lot of liquidity, and at some point the Fed has to make the decision. That's, I guess, the last point I'll make on the Fed is like I am very curious to see if they change anything regarding reverse repo on Wednesday, because I think if you were to try and mitigate some of the risks we're talking about, having $2 trillion come into the market and start pumping up asset values would probably be something that was unexpected, but also probably necessary. So we can see if the Fed is smart, or maybe they just do want to crash the economy, like some people suggest when I bring this up. So there's people I said, oh yeah, they can do the reverse. Well, they never do that, Peter, because they want to crash the economy. It's like, yeah, I there's two that runs the risk of again causing a credibility problem with the Fed. Oh, look, they just terrible. They ruined the economy. So there's got to be a middle ground there. You don't actually overtly want to crash the economy, even though you say, well, there'll be pain. Well, people lose jobs, but that's sort of we're not trying to do that. Just what we do. So.
Well, yeah, I don't think they're trying to. As we went over in every sector, it's just that bad you can't contain it. They've been doing it for too long, and that's I don't think they want to crash it. I don't think they want to crash it. I think they're trying to, post it up or keep it alive just till they can get to that digital currency, which is why they're smashing crypto now, which is why, Fed now comes in July. Timing is everything. And this month, month of June is going to be insanely telling on what's going to happen here in the United States. Like we said, phase 6 contracts, give them about 2-3 weeks to fully process those. One of the things I've noticed, though, is I think a lot of those firms are running over to those one-day bills because they can use those one-day bills as collateral.
Yeah, absolutely.
So I think that's what they'll do is they'll go run over, if the ones that can afford it, they'll run over, get some bills, and then open up a new contract with that. But and then you got the LIBOR switch, and that LIBOR switch to me is going to be a massive thing because, like we said, I mean, you have quadrillion worth of derivatives over there. You got a lot of renewals to do.
And that's it. It's just it's an unknown. It's an unknown. So it's not boring. It's like I've mentioned. Like this is not it's not. You can't say that this time in the world is boring. But my God, there's almost there is way too much going on. It's like it's impossible to keep track of everything. So.
Last question for you, just a quick one. So do you see a stimulus coming in the United States or do you think they would not do that until they could get a CBDC in place and issue it through the CBDC?
I honestly, anything's possible under this government. Again, I try not to talk about U.S. politics, but I think Biden will do whatever he thinks he has to do, and because he's got relative support in the Senate, if he can find enough Republicans to go along with it, and however they're bribed, I mean, then another stimulus is possible. Even though, I mean, look at the whole, like, McCarthy had to concede on this whole debt ceiling argument, right? It's like trying to make a victory out of his concessions, but really the Republicans flopped, and they to some extent it was self-serving because if they let the debt ceiling blow up, then they would get blamed for it. So it's like, he had to concede, but honestly, it's like it sets a precedent. Well, it's like, we need the stimulus because otherwise the market's going to blow up and blah, blah, blah. Okay, so, do you, McCarthy, do you want to be known in history as the person that let the U.S. economy implode? Okay, no, I'll sign whatever you need to sign. So I do think it's a possibility, but I think the preference would be, like if we can hide it with the digital currency rollout, that would be preferred.
Oh, yeah. And speaking of that, just one more point off that. So with the Treasury bonds, too, as well, because they talked about the debt going up so high and they were talking about getting to 50 trillion. And I think we're going to get there a lot faster than they think. The first day that was passed and signed in, they borrowed $358 billion in one day, which was the highest amount in the history of the United States. So their spending habits are just getting worse and worse and worse. And the fact that they did it unlimited, these treasury bonds, they're going to get riskier and riskier and riskier on top of the reverse repo. So that rate to me is going to have to jump so high, so fast and then you're going to see people like us going into it too. So like I said, I feel like these band-aids, they've used every single band-aid they have in the box. The only thing they can try and do is make one more federal program, another program, grab another box. Yeah. But at some point, the whole body, you can't stop the blood flow. You covered up.
You make a great point. It's like at some point, like if you want to finance it all with short-dated bills, eventually that will the curve's inverted, but eventually that will play into the fact that you're going to increase your financing costs for 2-year notes, 3-year notes, 5-year notes, and again, that just creates additional problems down the road. You basically, you said, I like that scenario. You've used up the entire medicine case. There's no band-aids left. Something's going to have to suffer, and I honestly think that the short-term financing trick they're using right now is not sustainable. So like they're hoping for June 15 taxes, but I don't think it's going to be enough to really make a difference. So
not when you're spending like that. It's not.
No.
Well, thank you for doing this. Unless you got one more thing to go over, I appreciate always talking about this. You give a ton of information. I always love learning from you.
Yeah, no, my pleasure. If I can fit it in, I can. And weekends are usually best, so happy to do it.
Sounds good. I'm sure we'll have, there's always so much stuff going on every day. I'm sure we'll have a lot to talk about next weekend.
Talk to you later. Bye.
Everyone, thank you. Thanks, everyone, for joining. Have a good night, guys.